Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Hey there, Bitcoin Bulletin crew. Today we're diving into a fascinating story about Bitcoin's hash rate hitting record highs. But here's the thing. The price and network activity just aren't aligning. So, what's going on? Well, if you've been following the news lately, you'll know that Bitcoin's hash rate, the computational power required to mine a block on the proof-of-work blockchain, has been surging. We're talking about an all-time high of 838 exahashes per second on a 14-day moving average, and even reached 974 AS on a 24-hour time frame, which is just shy of its previous record. Now you might be thinking, oh, that's great news, the network is getting more secure. And yeah, it is. But here's the thing. This surge in hash rate isn't translating to higher prices or more activity on the network. In fact, Bitcoin's price remains about 25% below its all-time high. So, what could be driving this divergence? Well, one major factor is mining costs. As the block subsidy halves every 4 years, which is happening right now, miners need strong Bitcoin prices and full blocks to stay profitable. And that means they need more transaction activity to cover their operational expenses and capital expenditures. But here's the thing. Transaction fees are extremely low right now, averaging around 4 BTC per day. That's roughly $377,634, which is a far cry from the days when miners were earning hundreds of millions of dollars in revenue from just one block. Developers and analysts are warning that if this trend continues, we might see a problem on our hands. Half-empty Bitcoin blocks tell a tale. Hawking the store of value line could scupper its future, says Nicholas Gregory, creator of the Mercury layer. And James Van Straten, senior analyst at Bitcoin Bulletin, agrees. If we don't get people using Bitcoin for real commerce, it's game over, he warns. So what's going on? Why aren't we seeing more activity on the network? Well, that's where things get interesting. According to data from Mempool, even some of the biggest pools are struggling to fill blocks with meaningful transaction volume. In fact, Foundry USA pool just mined an emptiest, non-empty block in over 2 years, containing a whopping 7 transactions. Now you might be thinking, but James, maybe that's just a minor anomaly. But here's the thing, this is a trend we're seeing across the board. And if it continues, it could have serious implications for the future of Bitcoin as a store of value and a payment system. So what can we do about it? Well, Nicholas Gregory suggests that Bitcoiners need to realize that this space is more than just podcasts and spaces. We need to see real-world usage and adoption. And James Van Straten agrees, saying that if we don't get people using Bitcoin for real commerce, the value of the network will suffer. So there you have it, folks. A record-high hash rate, but a price that's still stuck in neutral. It's time to rethink our assumptions about what makes a successful store of value and payment system. And at Bitcoin Bulletin, we'll be keeping a close eye on this story as it unfolds.